Okay, guys, welcome. I wanted to spend some time with you in this lesson talking to you guys about the software that comes with your membership, as well as the differences between that software and the software that we run to actually alert you to these patterns. I also want to cover when these software uh, indicators can fail you when they really shouldn't, and when they can be a disadvantage or even when they can be an advantage for you. Um, right now, what we're looking at, this is a chart, doesn't really matter what the symbol is, but just so you know, it's the Kiwi yen. It was just the first one that popped up. And I don't know if you guys can spot it, but there's currently a couple patterns that are on this chart. Now, I want to first start off by explaining to you guys that once you do have your indicators set up, you should probably save them as templates so you don't always have to keep on entering the license key each and every time. But when you do get the software loaded correctly, you should see the sonar, which is important. We'll get into that, as well as the Hurst exponent, also important. And finally, the harmonic patterns, which is key. Now, uh, the patterns that we're going to be looking at here are going to be run on, and again, your broker's data feed, okay? And since the forex market's an OTC market, or of course an over the counter market, it's going to differ from broker to broker because there is no one central exchange. So you are looking at a glimpse of the market where it stands with your particular broker. Now, where this can play an advantage or a disadvantage is if you look at the smaller patterns. Now, this is a daily, so it's probably not going to play as much of an effect as if it was, say, a 15-minute or a 5-minute. But if you were to look at some of these smaller term patterns, one pip going in either direction can cause this whole ratio, this 168, to be something different. Okay, and these numbers, you can see this is a 056 retracement. um, each pip can make a big difference. So if this goes past, let's just say an 886 retracement, this is your A to your B to your C point, by even a pip, it invalidates the pattern according to your software. Okay? So does that invalidate this pattern? Does it mean that you can't trade it? Well, in my books, I usually allow for a bit of a variance, okay, because the market is not always going to be exact. So don't hold the software to every little detail that it gives you, because one pip being on your broker could make a big difference. Now, with that being said, of course, what we do at Groundworks is we look at 5 brokers' data feeds, and then we figure out what the average is, and we run the harmonic software against that. So you have to at least meet, for us to publish it, 3 out of 5 brokers, okay, have to agree that the pattern is in place. That gives us an error sort of window that we can play with to say if this pattern is still valid or not. So by far, you should be looking at the alerts not on your own screen, but on the one that appears inside of Groundworks. Okay, so that just goes for the same way. When we talk about stops, your stops, okay, should technically be at the top of this P Z. But does that mean if price goes beyond it by a couple pips that this trade is totally collapsing out the window? Absolutely not. Okay, the market is not going to be perfect. So what you want to do is you want to allow for some variance in with your trading. How much of it is going to depend on actually your personality. Okay, so let's get back to things. And let me just show you an example of what I mean. This was actually brought up in the room by one of our members on a trade, and he said that he spotted a pattern, but the software actually invalidated it, and he wanted to know if he should still trade it. Now, in my books, of course you could. The pattern that he was looking at was this would be your X point, and you would draw the line all the way down, and you can see this would be your A, and then your B, and then your C. Now, the C point actually gets invalidated because it goes past an 886 retracement. Okay, now this was a 15-minute pattern. You could also have looked at it on a 5-minute chart, and there was a difference of about 3 or 4 pips. Okay, because it didn't exceed the X point, and because it was only breaking on a few wicks just below that 886, and it still went up and actually performed a nice little crab pattern, this trade in my books would still be valid. However, your software, if you're only using it on your system looking at one broker feed, is not going to catch it. Okay, so that's the key behind what we do here at Groundworks, is that we actually look at 5 different data feeds, figuring out an average price, running that against all the harmonic software that we have with a bit of built-in variance to it, so that you still should get um, patterns like this fire off just by looking at your screen and not necessarily looking at the software. Okay, so just be careful that, when you see a pattern in a trade that looks very obvious to you, break out the fib tools. There are videos here on how to actually calculate those fib patterns, and see what part of it did not get validated to make that pattern. And if it's something like this where you kind of breach it by a few pips, that's okay. Let it slide, and the market's not going to be perfect, and let it go. So when we talk about some of the advantages and disadvantages of the software, it is important that the pattern is valid with the ratios. However, with that being said, there has to be a bit of a variance built into it so that, a few pips here and there will not invalidate the pattern and invalidate your trade, because it could be perfectly acceptable to trade. Okay, that's because the Forex is a market that, is a cash market. If you went over to futures or stocks where you have an exchange and everyone's looking at the same price, even then, I would allow for a little bit of variance, but you don't have to allow for as much, because on a different broker, this might not have exceeded your 886, and it could have been a perfectly valid pattern, right? So keep that in mind when you're using the software and you're looking at the software, that's something that you're going to want to focus on and something you're going to want to concentrate on. Okay, let's look at the software for a second. We just want to talk about this. The 3 main ones that you should have loaded on your system, of course, and running are the harmonic patterns, which will define these big blue triangles, as well as the sonar. Now, the sonar is going to be critical in looking at the vibrational waves of the market, okay, to see where price might be heading, in the way if there's downwards pressure in the market, or if there's some upwards movement that's going to be coming into the market. That sort of thing is what sonar is going to tell you, and it could be very valuable to you. The Hearst would be the final one, and this will tell you there's lots of persistence or anti-persistence in the market, as you already know by now. However, what I want to tell you guys is that the sonar and the Hearst exponent is not the be-all and end-all to your trading, okay? The number one thing that you need on here is the harmonic patterns, because ultimately that's going to define for you your risk to reward, okay? So that is going to make it valid as a trade, not just a signal, is if you have that risk to reward that's actually going to play out and work for you, depending on where you want to actually take the trade. So just to recap, the software is not going to always be 100% on your broker platform. So, have an eye out on Groundworks and see what happens. If you see a pattern that looks so obvious, measure it out. There's a video on how to do that, and you'll definitely want to still see why, and then determine if it just got breached by a few pips. Likewise, if you are searching for failed patterns on Groundworks, it's only going to make sense if it fails by a few pips and turns around, right? If it fails by more than that, then you have a clear failure. But if it's just by a pip or two, that's why we often leave our stops much further out, just to account for a few pips of variance, as well as the spread that could be in the play as well. So that's what you're looking for with the software, is those degrees of variance, and you're going to see this specifically on a lot of the 5-minute, the 15, definitely the 1 minute if you even go that far. The 1 hour and 4 hour and daily and weekly can also see it happen, but it's not as common. Okay, you'll most likely see this on the 15-minute, the 30-minute, the 5 minute, something like that. Of course, the lower you go in the time frame, the more likely you'll actually see this happen. Now, hopefully you guys have had no problems installing the software. There's a video on how to do that. If you do have any problems with it, you can send support an email and they'll definitely be able to help you out. The point of this video is to kind of show you guys what the software and how the software can kind of screw you up, because it's not the end all and be all tool, but it's great to help you kind of find the pattern and to recognize them, and kind of makes your life easier. But do focus on the alerts that Groundworks is firing off, because even though you might see a pattern fire off on your screen first, and then you might see it later on Groundworks, that's just because we were waiting for a couple more brokers to recognize that pattern. Okay, so definitely do watch Groundworks and the signals that it's providing, because that's what's going to be the end all be all. Now, you will get patterns that appear on your broker and they don't appear on Groundworks, and that's because the majority of brokers have not met the required ratios in order to get those patterns into Groundworks. Okay, and those patterns that don't meet the required ratios are patterns that I don't particularly like to trade. Okay, so my end all be all list of patterns I want to trade is actually going to be on Groundworks. So hopefully that makes sense of why you guys might be seeing on patterns on Groundworks that you don't see them on your chart, as well as what makes a valid pattern to trade, and all this stuff can change on the smaller sort of time frames with a pip or two difference. So it's not that you shouldn't trade the smaller time frames. Of course, I love doing it, like the 15, the 30, the 1 hour, they're all great. But you just need to recognize the fact that these pips can make a big difference when it comes to the ratios. Okay, if you guys have any questions on this, do let me know, and definitely we'll sort it out. But yeah, I just wanted to get this video out there so you guys knew and understood what the software was all about. Remember, the software is not the holy grail, okay? The software that you're running, at least on your systems. But what it will do is it will help you recognize the patterns that do fall into place within the ratios. All right, guys, have a good one, and we'll see you in the next video.